Welcome, investors. Today I'm diving into how Opendoor, the leading iBuying platform, is poised to disrupt the trillion-dollar real estate market and why it's a game changer for your portfolio. Let's set the stage. The US residential real estate market is massive, $25 trillion in housing stock with $900 billion in transactions every year. But it's also slow, complex, and stressful. Traditional home selling means agents, listings, showings, and months of uncertainty. Enter Opendoor, a tech-driven platform that's rewriting the rules. Opendoor's iBuying model is simple yet revolutionary. Sellers get instant cash offers within 24 hours, powered by AI-driven algorithms and real-time market data. There's no need for staging. No open houses, just a fast, flexible closing timeline. Opendoor buys the home, manages any renovations, and resells it, streamlining the entire process for both sellers and buyers. Now, from an investment perspective, Opendoor's first mover advantage is key. Since launching in 2014, it's sold over 80,000 homes and generated $10 billion in sales, capturing nearly 5% market share in key cities like Phoenix. That's faster growth than Amazon achieved in its early days in retail. Why does this matter? Opendoor's model really speaks to a growing segment of sellers who value convenience above all else. A recent study found that 65% of first-time sellers would accept 20% less just to avoid the hassle of traditional sales. Opendoor's 6 to 10% service fees are right in line with agent commissions, but its speed and certainty create unmatched value. Financially, Opendoor is scaling fast. In Q1 2025, it reported $1.2 billion in revenue and sold nearly 3,000 homes. Profitability is still a challenge thanks to market volatility, but Opendoor is aggressively cutting costs and building partnerships with agents, showing real adaptability and resilience. And when it comes to the competition, unlike Zillow, which moved away from iBuying, or Redfin, which focuses on low-fee brokerage, Opendoor is doubling down on direct buying. Its proprietary tech and data analytics give it an edge in pricing accuracy, reducing risk and boosting margins over time. Of course, there are risks. Real estate is cyclical, and Opendoor's model requires significant capital to hold inventory. Rising interest rates or a downturn could put pressure on margins. But Opendoor tackles this head-on with dynamic pricing and a growing agent referral program, balancing direct sales with traditional channels. So why invest? Opendoor is disrupting a fragmented, inefficient market with a scalable, tech-driven solution. Its network effects, brand trust, and impressive 70% net promoter score, on par with Netflix, set it up for long-term success. As it expands, Opendoor could grab an even bigger slice of the $50 billion in annual real estate fees. Opendoor isn't just selling homes, it's redefining real estate. For investors, this is a rare chance to back a true disruptor in a market that's ready for change. Want to dig deeper? Visit Opendoor's investor page at opendoor.com, or check out the latest updates on nasdaq.com for open stock insights. The future of real estate is here. Don't miss out.